Hey, this is Yonah Weiss, the Cost Seg King. And if you want to learn how to sharpen your axe and take down your biggest goals, you should be listening to the Small Axe Communities Podcast. My good friend, Nico Salgado.
Hi, welcome to the show. I'm Nico Salgado, and I chat with top industry leaders in multifamily and business. I believe that it only takes a small axe to build a lasting empire. And if you want to learn how to use your small axe to accomplish your biggest dreams and goals, then join our Small Axe community and enjoy the show. All right, guys, welcome to another episode of the Small Axe Podcast. Today we have an awesome guest. His name is Yonah Weiss. If you don't know Yonah Weiss, he is the Cost Segregation King. He is a master of communication and a networker. He is an educator and a LinkedIn marketing master. He has helped hundreds of real estate investors in saving tens of millions of dollars in income tax through cost segregation with the Madison Specs, and has been a guest on over 90 of the top real estate podcasts on the subject. I think it might even be more at this point. Is that right, Yonah?
Well over 100, but I lost count.
Great. Well, welcome to the show, Yonah.
Thank you, Nico. It is my pleasure to be joining you. It's always awesome to speak with people about, what I love.
That's great, man. And, so just some background of you. I found you on LinkedIn, like many people did, and I learned a little bit about you through your networking on LinkedIn, but also learned about you on different podcasts because, like you said, you've been on over 100, and I would love for you to share some of your story and your background before we get into what you're doing now. So could you share a little bit of that?
Yeah, I mean, I love teaching. Really, it's been my passion for forever, basically. Even since I was like in junior high school, I was like a tutor and, working with kids and at all levels to the point where I was, teaching in collegiate level, all different sorts. And I find for me, it's more about just sharing what you know and less about like formal classroom type teaching. So I found outlets for that in so many different ways throughout life. So whether it be my family, I have 6 beautiful children, and that's keeps me busy teaching all the time, and that's a lot more just by how you act more than anything else. And who you are, because that gets picked up on by kids, especially as they get older. So that's really sums up a lot about my life and about what I've been doing. I was actually a formal teacher for many years, and got into real estate just about 5 years ago, when kind of on a whim, just looking for something else to do on top of what I was doing currently and already at that time, and it just kind of fell into place. A few different opportunities. And a big mindset that I have is when an opportunity comes your way, it's meant for you. And, it's definitely meant to, to think about, not necessarily to say yes to everything, but, if you're looking for an opportunity and something is brought before you, then you have to see that as like a sign, like divine providence is kind of directing you in a certain direction. So.
Excellent. Yeah, I love that, man. And just to back up a little bit, I feel that, leading by example, as you said, with your kids, I do the same thing with my daughter. It's so much more powerful than telling somebody what to do, but being that person. You really bring out the best, because people they emulate you. And if you can show and be the person, that you don't have to tell anybody what to do. They will see it and they will copy. And if you're leading by example, I think that is an excellent way to go. So that mindset is great. And moving on to, wow, man. So you were a formal teacher, huh?
Yeah. It's just something I love to do. I love much more like a one-on-one type environment, but classrooms, I just love it. Just kind of take it over. It's an opportunity just to find, and public speaking is kind of the same thing. You find out who they are, who your audience is, how they can relate to your message. And then you're able to, it's very much like performing in a way, like theater, so to speak, that if you're really good at it, you feed off the audience, right? You feed off the classroom. And so if you can get control of that, and it's really difficult with kids especially, but if you can, then they're like, you can just shape that. You can do so much. There's
Man,
so much opportunity.
I feel that. I am a school teacher also. So I teach seventh and eighth grade Spanish, and I have found myself numerous times standing on desks, hanging from the ceiling, and honestly captivating my students in a different way than other teachers do. And the same thing you were talking about before, I lead by example. So I don't yell, I don't raise my voice at my students, and they know that if my tone changes slightly or if my eyes change slightly, that's all I need to do, you know. When it comes down to controlling a classroom, it is not easy, but you got to use the same tools and same practice
Yeah,
that you do with your own structured life.
that's
Um,
awesome.
Jonas, so you provide value in so many different ways to so many different people, from teaching, with your family. That's 6 kids is a lot, man. More power to you. I love that. I wish I can get there. Maybe one day I will. But that is amazing. I love that. And, also in business as well. So, but you've given so much on LinkedIn. I've seen you put up, do so many webinars and just so much advice and just the way you talk to people. And then on the real estate end, you do cost segregation, and the way you help people save money through that is just phenomenal. Maybe you can talk a little bit about cost segregation, and I guess we can start with what it is, because there are a lot of people out there that aren't sure what it is.
Right, it's like, what's this cost segregation thing? What's that? People know what the heck it is, and it's true. It's really it's like an advanced form of depreciation. Okay, and I always say that depreciation doesn't sound like it really is. It's a tax deduction that the IRS gives when you buy a property. Okay, besides for your personal residence, any type of commercial business property, investment property, you just the fact that you bought it, you now get tax write-offs, okay, tax deductions, and that's called depreciation. And it's based on the fact, on the principle that is that things go down in value as time goes on, right? So when you buy a property, it has, a useful life, so to speak, but it's not intrinsic to the property, because if it was, then it would just start when it was built and it would finish at a certain point in time. But the IRS doesn't say that. They say that when you buy a property, you actually now get to start over this whole depreciation schedule. Okay, so for the next 39 years or 27 and a half years, if it's a residential property, you can now take a tax deduction that is a percentage of the basis, right? The percentage of the value of that property that you bought. So you buy $1 million building, you now get to take as a tax write-off $1 million over the course of the next 27 years. So that's essentially what depreciation is. It's giving you a small little tax deduction, income tax deduction every year for buying a property. So like I said, cost segregation is really just an advanced form of that, because it's saying really there are things in the property, in the building, or outside the building as well, that depreciate or that have a faster, useful life, a shorter useful life, and therefore can depreciate faster. So you can take those tax deductions faster if you apply this process called cost segregation, which involves an engineer coming to the property and identifying everything in there into different categories, and therefore taking those things that depreciate on a faster life, take those tax deductions at a much faster rate. So accelerating depreciation, increasing your cash flow, creating more tax deductions in the earlier years of ownership.
Okay, excellent. So I'm getting that. And you mentioned a few, so there are a few different years. So like with residential, you're saying there's 27 and a half years for depreciation, commercial 39. What about multifamily? Where does that fall?
So multifamily is actually considered residential from this standpoint, even though it's, technically a commercial property, but from the tax standpoint, it's still considered residential. So it fits in that 27 and a half year schedule.
Gotcha. Now, what about people who does, well, let's start like this. Does everybody use depreciation when they're doing their taxes?
Yeah. So essentially what it is, it's a tax deduction. Like you own this property, you make income from your property. Now you get to take this write-off that says, we're going to lower your taxable income. Okay. You made $50,000 in profit. You can now just lower that by $20,000 this year, because you have this depreciation deduction. So it's essentially just applied to your taxes. And cost segregation is just a method to literally wipe out your entire tax liability. in many cases during those first years of ownership. So instead of saying I have this $50,000 income, wipe out 20,000 of it, and I'm still paying taxes on the remaining 30,000. Say no, here's extra deductions, wipe out the entire amount, pay zero taxes.
Gotcha. So why does everybody use a cost segregation study, and why or why not?
I think people who are in the know, people who know about it, do it, and it's really interesting. I spend the majority of my time just telling the world about cost segregation, right? Just educating people. Why? Because there's an endless amount of people that have no idea what this is, and essentially that's the main, number one reason why people would not do cost segregation, is simply because they just don't know what it is.
So so let's say that if people were knowledgeable about it, they understand what it is, 100% of the time they're going to do that cost segregation study.
Pretty much. I mean, there are very few examples why a person wouldn't do it, and but with the tax favorability of doing it, it's basically a no-brainer.
Right. So now, are there certain properties or sizes of properties, or I guess sizes or costs of prices of properties that wouldn't fit the mold of doing a cost segregation study?
Yeah, the benefit is proportional to the cost basis, meaning the purchase price, how much you paid for the property. So, you could typically get for multifamily properties, for example, somewhere around, 20% of that purchase price as a tax benefit in the first 5 years. So the larger the property is, that percentage just increases, right? And the fee for getting it done, for doing this, is not going to increase because it's not contingent on tax savings. It's usually one set flat fee, and it's pretty much around the same amount regardless of how big the property is. So my rule of thumb is usually anything over $500,000 purchase price has significant benefit to it, and beyond that it just keeps multiplying. Whereas smaller properties may not have a lot of benefit because, again, it's just proportional to the purchase price.
Gotcha, man. So wow. So the bigger the property, the more you're going to be able to save people. Is that right?
Exactly. $1 million property, and you're getting 20% of that. That's $200,000 over the first 5 years. If it's a $10 million property, it's $2 million, right? If it's a $50 million property, that's $20 million. It just keeps increasing.
So and this is over the course of 5 years. Is that always the case?
Yeah. Well, the reason why that is because what this main thing that we're doing in cost segregation is identifying different assets in a property that depreciate faster. And the main category of that is something called personal property. And so all those things depreciate on a 5-year schedule. So we'll go into a building and find, anything like the carpeting, the cabinets, furniture, appliances, countertops, special purpose electric and window treatments, and all kinds of things that are not part of the structure of the building. And all of those things depreciate on a 5-year schedule. What that means is I can now find the value of all of those assets and take it as a tax write-off over the course of the next 5 years, or the first 5 years of the property being purchased. So yeah, that's why in the first 5 years, that's when you're going to get the majority of this tax benefit.
And what happens after those 5 years?
After those 5 years, that amount of the depreciation has already been taken, and so what you're left with is the other 80%, let's say, of the depreciation deductions that you're now going to take on that longer schedule. There's some 15-year schedules, but the majority is in that 27.5-year schedule.
That's awesome, man. And I'm going to do some backing up at some point, but I kind of want to continue with this. So let's say for a lot of the a lot of the operators that I talk to and partner with, we tend to look at 3, 5, 7, 10-year holds. Mm-hmm. Now, what if we only had like a 3-year hold, or would we be able to capture some of that depreciation in the cost segregation study, or the majority of it within those 3 years?
Absolutely, because what you're getting those tax benefits up front, right? So you can benefit from them immediately in the first year, first few years. the law, it's all within the business plan of the property, owner. There are certain times where it might be more advantageous to get it done on a property that you're holding for a shorter period of time, or for some people, depending on their business plan, for a longer period of time. Those first 5 years are integral to the tax benefits there, but it can be different for everyone.
Gotcha. Now, let's talk a little bit about bonus depreciation. Is that something different than cost seg?
It was a law that was placed, basically came into being in the recent tax reform of 2017, 2018, which allows you to take instead of over a 5-year period or 15-year period, anything that's accelerated to a faster rate, instead of taking it, a little bit every year, you can actually front load the entire amount into the first year. So 100% bonus depreciation means that whole 20%, as opposed to spreading it over 5 years, you cannot take that entire amount in the first year. So that's huge. What that did is that opened up, a huge amount of opportunities for people to take massive income tax deductions, which in many cases, especially people who are real estate professionals, can be extremely beneficial, because they're able to use these deductions not only to offset income from their properties, which is, essentially what this is all about, right? Is you're making money from your properties and you're not paying tax on them. But now you can actually use that for real estate professionals to offset income from other areas as well. So that's really where the main benefit is going to come in.
I mean, it's just so huge because you can take that, roll it right into another property. I mean, this is just there's so many benefits to this. And the fact that not everybody, well, okay, let's back up, because is everybody able to take advantage of bonus depreciation?
Not everyone can take advantage of it. It's something that you're taking these extra deductions. If you don't have any income, then income tax deductions don't help you, right? Because what we're doing here, we're not creating refunds, right? This is something, well, actually, not to get ahead of ourselves here, but there was actually a recent change in the tax law with the CARES Act a few months ago that actually made possibilities of getting tax refunds as well. But usually depreciation does not create tax refunds. So if you have more deductions than you have income, then all that does is create a passive loss, meaning you're not able to use it. You could carry that forward. It can be used for future years, but you're not going to benefit from it. So that's why not everyone's going to benefit from extra depreciation. But like I said, if you're a real estate professional and you can use those deductions to offset other income as well, so you may not have a lot of income from your property, but you do have other income from another area, maybe in other sources, or your spouse has a W-2 job, it has other income. You can use those depreciation deductions to offset that income as well. So that's really where the main benefit of this comes in.
Yeah, it's amazing. It's really, some of these tools, it's almost like it's free money, like they're just giving out money. Why would the government do this, set these policies that are just so beneficial for investors?
I have no idea. I mean, I have theories, but, the main theory, the main theory I have is that the majority of Congress are real estate investors, and that's why they passed the laws to benefit themselves, which it's a good theory.
It makes sense. That's what they want us to be doing. And it's like, we're helping the economy out. The real estate investors definitely should be given some sort of break, because we build communities,
right.
And we help the economy as well. We bring in jobs and house people. I think it's something
Absolutely.
that's very important. And for the government, itself to take on certain aspects of housing, and it's just not necessarily their forte. So why not provide some benefits to people?
Right. So, I mean, that's really the main theory as well. The other thing I said was more tongue in cheek, but, the main theory is, right, what's the most essential need that people have, right? Is housing. I mean, besides for food and water, right, and air to breathe, is housing. And so the fact that real estate investors, regardless of the, the gloomy picture that some people might have of, slumlords and things like that. Mm-hmm. These are actually people that are contributing a significant amount to the economy, right? Making places so people can live. and creating communities where it's actually places where people want to live. So that contributes to the economy, and very much so. So yeah, to incentivize that makes sense.
I agree. I mean, there's just, and it's for me. I don't know about anybody else, but I get really excited when I just hear the fact that you can save money, that you can, with all these tax incentives and benefits. Why not take advantage of them? Now, let's talk a little bit about the bonus depreciation for one more second, because you had mentioned that you have to be, or you should be, a real estate professional. Is there certain qualifications that would qualify somebody to be a real estate professional?
Yes, it's not necessarily a title. This is more a tax terminology. So you don't need to be a broker per se to have this title, this terminology applied to you. What it is it allows you, if you spend the majority of your working time in the real estate trader business. So you need to be, materially participating in real estate trader business, so that you have to own property, number one. Okay. And number two, it has to do with, operating, managing, renting, leasing, brokering, acquiring, building, constructing, anything that has to do with actually running a property. And that has to, like I said, has to be the majority of your working hours. So you really can't have another job. There's another qualification that you have to have 750 hours per year doing this. So it really means you have to be, actively involved in real estate to get this qualification. So either you or your spouse, and only one of you needs to have this status in order to take advantage.
I gotcha. So let's say the standard real estate investor, they're typically just going to be taking depreciation, right? So we have depreciation, we have a cost seg study, and then we have bonus depreciation, right? We're going to split those up a little bit. So everybody is basically taking depreciation because you kind of have to, and it's just standard tax practice. Is that correct?
Yeah, accountants that don't know any better are just applying your regular depreciation. It's a very easy calculation. You take the property, you subtract a certain amount for land, and then whatever's left over, you divide that by 27 and a half, and that's your tax deduction every single year.
All right.
Yeah, that's depreciation.
So now we're going to inject some steroids into it and essentially introduce cost segregation, which is like the meatier, beefier version of depreciation. Can you now just touch it one more time on that?
Absolutely. It's dividing up your property into different assets and saying that certain things actually depreciate on a faster schedule. I'm going to get an engineer to come to my property, identify what those things are, and take certain percentage of the overall depreciation. I'm going to front load a certain percentage of that to the first 5 years.
Awesome. And then there's the option to take bonus depreciation if they qualify for that as a real estate professional.
Yeah, absolutely. So what that's going to involve is once you do the cost segregation study, it's not something different. Once you do the cost segregation study, you have the option to now take anything that you've identified as faster depreciation and take that all in year number one.
Gotcha. Wow, that is heavy. Okay, now it's great. Now let's say that somebody, what is the reservation? I know that you mentioned in the beginning that people just don't know about it, right? There's got to be something else. What is there? There's cost to it, right? So maybe we can talk about that and kind of crush some limiting beliefs that say, well, I can't afford it, or it won't work with my property.
Absolutely. And there are some false information floating around the internet. Literally, someone put a blog post up a few weeks ago on LinkedIn, just all about cost segregation, which was interesting because this particular person I had a conversation with in person, about a half a year ago, where I described asked me every question that he had about cost segregation. And then, I see this blog post, and it was basically all about cost segregation, which he didn't know anything about before talking to me, which that was fun. I wasn't asking for credit, but what was interesting to me is that one thing that he said in there was like, this may cost you anywhere from $10,000 to $20,000 to get done, and therefore may not be that accessible for a lot of people. And that's just false. Unfortunately, it used to be the case, and it used to be the case that it was more relegated to larger corporations, larger companies, because of the cost involved. Nowadays, it's something more, I can speak for our company. We're the largest cost segregation company in the country, and we, work in all 50 states, the largest volume for sure. We charge anywhere from $3,000 to $6,000 usually for most type of properties, especially multifamily properties. So that, to say, yeah, I can't pay $20,000 if my tax benefit's only going to be $50,000. Well, that makes sense, right? You shouldn't. But if your tax, benefit is $50,000, and a lot of people would pay $3,000 to $4,000 to do something like that. So it's really more about getting rid of those limited beliefs, just like you said, knowing that yes, there is a fee involved, there's a cost, and that's part of the reason why I said earlier that any property over $500,000 purchase price is going to be significant benefit, because that's going to be proportional to how much you're going to pay, for the fee to get the study done in the first place.
Okay.
By the way, I called that guy out, and I was like, "Hey, where'd you get that information?"
Good. What happened with that?
Well, it was interesting. I said, that this was something that was only, applied maybe like 10, 20 years ago, 10 years ago or so. Those were the costs and he showed me an article that he got from the Journal of Accountancy, right? That was dated 2005. So that's where he got that information from.
Well, there you go. So yeah, it's funny. People don't check up on things, and a lot of times, whatever we see on the internet or whatever blog posts we read, unfortunately, we take it for truth, and it's not necessarily always the case. That's why it's really helpful to talk to people, professionals like yourself, to get the real scoop and the real way to do things. Now, so why wouldn't somebody just ask their current accountant and say, "Hey, do a cost segregation study for me this year," let's say?
So accountants can't do this, and that's really the part of the reason why a lot of people don't know about this, because accountants, this is an engineering service, right? Essentially, it's something very much to do with engineering the property. And even though there's accounting involved, because it's an accounting method, but accountants don't do this. Don't get me wrong. There are some big accounting firms that do this in-house, meaning they have engineers in-house, the big four, right? But they're dealing with, billion-dollar corporations. They're dealing with, large companies that have, hundreds of millions of assets under management. They want to make sure that they're servicing their clients on all aspects. So they do it in-house. 95% of the accountants or accounting firms in the country do not do this in-house. And so therefore, you need to hire a third-party company, someone that specializes in cost segregation. So to answer that, no, your accountant can't do it. Unfortunately, I wish, if they could, then you'd probably know about it. Then everyone who had a property, they would know about this because their accountant would have told them.
Right. I mean, come on. It's ridiculous. And there's no way you're going to do it yourself either.
Yeah, I mean, it's impossible to do yourself, really, because there's so much that goes into actually getting it done. Yeah. There's so many rules and hoops to jump through just to make sure that you're checking all the boxes that the IRS requires for, audit protection.
Uh-oh. What word did you just say? And let's talk about audit. Has that ever happened? And does this like increase the risk of being audited?
So this doesn't increase the risk of being audited, because everything is in the tax code. Okay, cost segregation was introduced by and enforced by and regulated by the IRS. They made up all the rules, and everything is in the tax code. So if you're doing it by the rules and you're following the cost segregation audit techniques guide, which you can find on the IRS website, then you can do everything you need to do in order to make sure that you are, you're kosher, so to speak, if you ever to get audited. Now, getting audited doesn't happen very often. It happens. And if a person were to get audited, they want to make sure that, everything is, holding up and everything is going to be approved in that audit. So one of the things that we do is we offer 100% audit protection, which means that we stand behind our work at no extra charge, right? Which should be obvious, right? We're saying you're going to take this huge amount of tax deductions. You better make sure that you're doing it right, because if you were to be audited and it wasn't done properly, then you're going to be hit with huge, fines and penalties.
That's amazing that you guys offer that. Honestly, there is nothing that you're covering all the bases where it's like there should be no reason to not take advantage of this. Any savvy real estate investor, if they are not taking advantage of this, I mean, you're missing out on such a great opportunity.
Yeah.
Let's start now for action. So As far as an investor, at what point do they reach out to you? Like, what if they have the property already? Can they still take advantage of this?
Yeah, you can actually get this done even retroactively. Even if you own a property for a number of years and you never knew about this or you never did this, you did know about it, you didn't know about it, whatever it doesn't matter. You can go back retroactively and get these tax deductions that you missed. And that doesn't require you to amend any tax returns. It simply just allows you to do it by filing a form that's changing your depreciation accounting method. And that's all you need to do. When do most people do it? When you do find out about it, you want to make sure you can reach out. Like I said, we do a free estimate. We'll run an analysis so you can see what you're going to be looking at. You're going to see upfront before you even do it, right? Before you spend a dime, how much my tax savings are going to be, and base that, compare that to what this would look like if I didn't do cost segregation. So that's when a lot of people reach out, is even when they're under contract or right when they buy a property. They want to make sure they're getting things, set up already from the get-go.
It's great. It's, like I said, there's really no reason to not get this going. You're making it so easy for everybody. So let's say they start. I want you to provide everybody, I guess, your information, your contact information, or some way that people can, the best way for people to reach out to you. And should they start that conversation with you today? And can they have repeat business with you? Is that how it works?
Yeah, absolutely. Like I said, reach out. We do a free analysis for anyone. So it's definitely worthwhile to start that conversation. And I just love it because, again, I enjoy just helping people understand things better. People do this, on pretty much every property they own. It's just like, it's something, if you can get it done once, and it's really becomes part of your tax strategy, because especially you're getting huge reductions in the first year with bonus depreciation. You want to make sure next year you have another property maybe in the next couple of years so you can do it again and keep this flowing forward. So definitely reach out to me. Find me on LinkedIn. Find me, if not there, YonahWeiss.com. That's where we're at. Madison Specs is our company. You can go to that website as well. And
And what about your podcast, man?
Weiss Advice.
Love it.
Check it out anywhere you listen to podcasts.
I'll tell you, man, you don't necessarily own Weiss Advice, guys. He doesn't necessarily talk. Well, there's no politics, but he's going to run you down with whatever he doesn't talk about, which is, I think it's awesome. And he gets into some different types of conversations. It's not necessarily going to be a teaching platform. He brings up like these excellent guests. I recently heard you had Neil Bawa on there, and you really exposed some new things that Neil said that I haven't heard him say on any other podcast. And I really appreciate all the value that you're bringing through that as well. So guys, check out his podcast as well, Weiss Advice.
Yeah, thank you very much. I enjoy that. I enjoy conversations, and I think a lot of podcasts have their place in teaching and educating people. But I really started it just to have conversations with these people, because you may have heard of Neil Bawa before, right? You may have heard him on a number of podcasts, and a lot of times he's talking about the same kind of things, right? And that's great, and I love him for that. And I'm actually having him tomorrow on a meetup where he's going to speak to an audience, putting together about those topics. But when I have people on my podcast, I just like to have more like a talk show. That's kind of how I view it. It's like just asking them questions about life and about challenges and things like that. So it's a little bit different.
That's beautiful, man. I love it. Well, Yonah, thank you so much. Your time has been much, much valued by me, by all the listeners, and I guarantee people are going to be walking away with some actionable steps from this. And just honestly, keep crushing it, man. You are the best.
Thank you. I appreciate you having me.
Thanks, Yonah. I would like to say thank you for listening to another episode of my podcast, where we show you how to use your small axe to build a lasting empire. Now, if you liked what you heard, it would mean the world to me if you would subscribe, leave a 5-star rating, and write a review. Also, if you want to get in touch with me, go to my website at smalaxecommunities.com. And until the next episode, keep sharpening those axes.